Welcome to the program. Thank you for joining us. I think what really stood out here is the lower risk provisioning that you've taken for the third quarter, 195 million euros as against 614 million euros for the second quarter. It would suggest that you actually have better visibility on the loan book at the moment, and you're not seeing a rise in impairments perhaps as anticipated. Could you tell us a little bit more about the quality of the book and what you're expecting for the coming quarter?
Good morning from Vienna. Thanks for having me. Well, first of all, I would like to point to a very solid and strong quarter. The operating result has been holding up strong, and the capital position has been on the very rock solid level. Now, coming to the risk situation, the second quarter we have been putting aside a lot of provisions based on forward-looking information, and the third quarter has been pretty smooth in that respect. And our current and remaining forecast for this year with regards to risk cost is in the range of 65 to 80 basis points. Now, yes, it's absolutely correct to assume that this year, due to all the moratoria and guarantees that have been put in place by the authorities, we might not see any new building of NPLs as such. This might be postponed and will be postponed into 2021, and it remains to be seen how the pandemic ultimately unfolds.
Yeah, how concerned are you by the trend of the pandemic in some of your key countries, namely the Czech Republic, which did seem to have come through the first wave very well, and now, unfortunately, we are seeing a significant spike in cases. How worried are you about this?
It's a pure fact that the very intensive rise of numbers all across Europe, and in particular in some of the countries you were mentioning, in Czech Republic, came to a negative surprise after a very smooth summer. Now, just recently, governments took quite intensive measures, and I would call it a partial lockdown, and has been introduced in most of our region. We believe that from the perspective of an economic impact, there should be less of a dramatic impact as in compared to second quarter, since all the industrial production as well as construction and shops remain open. However, it's clearly a negative from an economic environment perspective. And we all can hope only that with these steps now and with these partial lockdowns, as I would call them, we get a good grip on the pandemic, and it will hopefully lead to a better recovery soon in the early 2021.